This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and then doing technical analysis over the SPY, Bitcoin, and TLT for, says the week of December 2nd. It's supposed to just say the day, but for December 2nd, 2025. And with that said, let's go ahead and jump straight into the data. And going over the data for December 1st, we had the global manufacturing PMI and the ISM manufacturing data. Now, the ISM data came in very dovish. It was very cool. We also had the Atlanta Fed GDP give us the same reading as last time, the 3.9%. And we also had the S&P Global Manufacturing PMI come in very hot. Um, what this is all kind of alluding to is a form of stagflation, and it's not going to be the same type of stagflation that we saw back in the 80s. It's the type of stagflation where all these companies, all these retailers really loaded up on their backstock because the fear was that tariffs were going to cause prices to basically blow out of proportion, that inflation was going to pick up dramatically. So all these companies have had to load up, and they've stopped loading up. You know, they did that months ago. I believe we talked about that in either June or July, that's when they really stopped their orders. And when the tariffs did come, um, all of a sudden, all these companies have all this stock and all this inventory, and it's not moving in the way it's supposed to. And that's exactly what this data is telling us, is that their inventories are not moving. They're going to have to pull down their prices because the consumers just can't afford to have increased prices, even though they have to increase their prices. So, what are these companies going to do? Um, and the thing that happens at the beginning of a recession is you lay people off, you shrink your headcounts, and we're already starting to see that across the board. So this is more of just data that's telling us the story that we already kind of know is true. It's just waiting to happen. Um, this stagflation isn't something that's going to last extremely long, as we're already starting to see many of these companies being squeezed. Um, Everybody, I mean, you could check the guidance for many of these retailers, and there are some of the retailers coming in this week with their guidance, and they've all been saying that consumers have been slowing down, and a lot of these discount retailers have been picking up in their EPS and everything because they're able to sit there and discount. They're able to pull in not just the average and higher consumer, but they're able to pull in the lower consumer. And now the average to extreme extremely wealthy consumers are now shopping at these places because the alternative is far too expensive. So we're seeing a shift where the labor market's showing deterioration. We're seeing a shift where manufacturing is not increasing, and with the manufacturing not increasing, that means that a lot of manufacturing jobs are going to start going out. So it's really just a big chain of events, and I would really like to do a video where excuse me, I have pneumonia right now, so if I cough, I apologize. Um, I would really like to do a video where I show this kind of in a staircase of what happens when everything happens, and it's really like a house of cards or something else, but this is going to really start kicking in very soon here. And I'm not saying that in a sense to promote fear, because I know there's a lot of people out there that make videos to, you know, promote fear and catch the headlines and whatnot, and I'm not really about that. But it is a time to really pay attention to these data sets. This is going to affect many jobs. This is going to affect pretty much everyone who listens to my videos in some way or another. So yeah, I would take this fairly seriously. This isn't we're not seeing the type of data that's telling us that we're going to get a soft landing. We're not seeing the type of data that's showing that all of a sudden we're going to get a massive growth boom and a massive inflation increase. We're seeing data that is heavily pushing us towards the recession narrative. Anyway, with that said, Howell is speaking as I'm making this video. I'm not watching it live. I'm going to watch a video after the fact if there's one available. Uh, with that said, whatever he does say will carry over to the markets very, very likely in tomorrow's trading session. Now, with tomorrow, we have plenty of data sets at the 10 a.m. time frame. So we have the construction spending month over month for September. Not a extremely important data set, but it is a important data set because very likely it's going to show a decrease in the construction spending. Um, so yeah, I'm interested in seeing that, but that's not going to move the market. More so, what will move the market is Fed member Bowman speaking at 10 a.m. and then the JOLTS job openings. And again, that's the September openings, but it still should sway the market quite a bit as that will, um, help solidify if this labor market deterioration is actually occurring or not, in the minds of many people. So that's Tuesday. Now, again, Wednesday is a fairly important morning, but we will go over that in tomorrow's video. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, as always, let's go ahead and turn on the daily time frame, turn on the moving averages and the Bollinger Bands. And one thing I want to show before we actually get into the daily time frame, I apologize, I keep coughing. One thing I want to show before we get into this daily time frame. So you all can keep your daily time frames open, keep your moving averages and Bollinger Bands open, but I want to show you very quickly on the hourly time frame that we did not have a 5 mod test today. Okay, that's very important because that heavily assumes that we will be seeing a 5 mod test tomorrow. Now, again, going over the moving averages and Bollinger Bands, the 5 mod tomorrow should very likely be around the 679 range. It might be slightly higher, it might be slightly lower. It really depends on what happens in the pre-market. If we have, the market rally potentially off of what Powell says or continue to sell off, can absolutely happen. So just make sure you're marking that level and being very aware of both the upper bounds and the lower bounds. And again, that's about $1 to $2 above and below the actual moving average itself. So assuming this is going to be around the 679 range tomorrow, that means that with the market closing at the 680.27, we should fully anticipate that 5 mod test to occur. If the 5 mod test does occur, you should anticipate both the upper bounds of the 5 mod test and the lower bounds of the 5 mod test to occur. Now, today we had a low of 678.74, and currently, you guys won't see this on your screen, but the 5 mod is at 677.42. We did have a bit of a selling day, but we did have the early bit of the day pull up quite a bit, which did pull the 5 mile up quite a bit as well. So earlier in the day, the 5 mile was probably around the 76, 70 range, give or take. And that means that the upper bounds of the 5 mile would be around the 678. Now, we got to a low again of 678.74. So do I really consider that testing the upper bounds of the 5 mile? Not entirely. The only bit that I really kind of concern myself with is on the hourly time frame. We do see that kind of towards the end of the day. We did start pulling down towards the top of that 5 mile range. So potentially we did test part of the upper bounds of the 5 mile. So I would very, very, very likely be looking towards the lower bounds of the 5 mile. And tomorrow, again, that's extremely likely going to be around that 677 area. Now, with the 5 mile very likely going to be tested tomorrow, that unlocks a very large range on the next step for the market. Okay. Because once the 5 mile is tested, either we can head down towards the 20 mile again. And as you can see, the 10 mile is starting to consolidate towards the 20 mile. The 20 mile is starting to consolidate towards the 50 mile. So all of our ranges are starting to really tighten up here, besides our very, very short-term moving average. If we pull back down to retest the 20 mile, there's a very high likelihood that we will see the 5 mile come right back down again. It will pull under the 20 mile, the 50 mile, the 10 mile, and all of a sudden we're in extreme bearish territory again. And all of a sudden that opens up the 650 uh, range again, because that would create, oh geez, what do I have on here? I'm going to turn off the moving averages and Bollingers here just so that I could show you what I'm talking about. But basically it would be this rejection off the upper major selling channel, and it would bring us back down into the major consolidation channel, and then we could target the bottom of that consolidation channel again. Now, with the 5 mile basically pulling above this consolidation channel, that can mean that we are aiming to build support there to move higher. Okay, that 5 mile test tomorrow can potentially be a very, very large bounce to the upside. And again, with the 5 mile being tested, not only does it open up the 20 mile, but it also opens up the upper Bollinger. And as you can see, the upper Bollinger is above the selling channel top. So that would basically, tell us that the selling channel is going to be broken through and that we can extend the buying channel outward, and we are fully expecting to continue upward. If we continue to see the rejection downward, basically we see the rejection from the 5 mile test, go down to the 20 mile, reject that level, and start heading down to the lower Bollinger again, then, we're going to be staying within this major selling channel. Our previous major buying channel will remain where it was, because that was when we broke out of it. And that bounce area would no longer be a bounce area. It'd be a massive rejection area. So very strong range to still set up straddles, because you're still very close to the 20 mile. So with that said, I still just want to kind of advise everybody that this is not a completed cup, okay? Because I've been seeing some posts today about it, even in the group chat and everything, that this is a cup. Um, it's not a completed cup. You really have to see the top on the bullish side completed for both sides, okay? Because that's how you're able to actually build the bear structure to create the handle downward, which allows you to then build the bullish structure at the bottom to go back upward and head up. So to me, this isn't a completed cup, and seeing, you know, a plethora, plethora of completed cups in my time, it really just doesn't look like it. It looks like a continuation into the selling. Now, before I jump into Bitcoin and everything, I do want to just point out that today with the dollar index, and that's the DXY, we are still seeing bullish structure on here. Okay. Even though we did pull down close to that prior support range, this can still very easily turn into a handle for this larger cup. Okay. Not that that's something I want. I personally don't want the dollar to go up. It's a bad thing, but we're at a very strong you know, range with this consolidation channel line, and it's extremely likely we're going to be pulling back upward, especially with the price action today. And just going over the hourly time frame here, we pulled down all the way to the 91 or to the 99 cent, and from that range we just started buying all the way back upward, and now we're starting to build bullish structure within that to very likely start heading back up towards that 99.82, and from that 99.82 heading upwards towards the 102 range. And this is kind of that bullish structure that I'm looking at. And this is exactly kind of what you're expecting on a cup and handle, is that you're looking for the bearish structure at the top, bullish structure on the bottom to push it higher. And that's exactly kind of what we're expecting here. Um, so that's something I'm concerned with, and this will transition us into Bitcoin because the dollar rising is bearish for Bitcoin. So just keep that in mind. Now, going over Bitcoin, and we're just going to go over the daily time frame. I will take a look at the hourly. I'm not going to show yesterday's channels and everything. If you want to see the channels and everything, just go ahead and take a very quick look at yesterday's video right at the start of the Bitcoin time frame and take a picture of that, and um, then you could follow along. But one thing we're seeing here in Bitcoin, and this is extremely dangerous, okay, is this inverse cup. Okay. If this inverse cup completes, and this is something we discussed in Sunday's video, that there's some massive downside to be had because we still have to see the major inverse cup from the very beginning be completed. Okay, so we're looking for continuation of bearish structure to push downward to complete this larger structure. Okay, so far we're seeing that. Okay, this is looking like it wants to fill that gap to the 80,700. It's extremely likely we're going to get that, especially when, just going over the dollar right now, it does show bullish structure pushing to the upside. Okay, it does show that it wants to claim that gap. Now, we haven't seen confirmation on that yet, but if we do get confirmation on that, again, we're really looking at this 74, and I'm going to edit this number because this needs to be 74, and it was actually like 74, 70, something like that. So that's really kind of the next major battle line is expect this inverse cup to play out, head downward, take that massive gap to the 74, 400, complete the inverse cup, and when completing the inverse cup, that's when you're looking for major bullish structure, okay? Because that bullish structure is how you get the move back to the upside. And I don't know why this shows no arrow, but it needs to. However, with us being in a major selling channel, The upside is still extremely large. Okay, this upside from this range could still be all the way to the top of this selling channel. If Bitcoin is going to continue selling off and remain in the selling channel. But that's still pulling all the way back up to the 107, 108,000 range. So there's still a lot of bullish room to the upside. Um, but on the downside, I do want to see that 74.4 thousand. Okay, it does look extremely likely that we're building this structure. Um, I was originally looking at, and I don't want to delete that just because that is marking a very key range, but I was originally looking at potentially us forming an inverse head and shoulders right here, and then forming a cup back up to the 107,000. That has now been invalidated with this push downward over the last 2 days. Okay. Um. So yeah, that's Bitcoin. Just be very, very aware of what's going on with the DXY. If we continue to see the DXY pushing upward, it will definitely signal that there is more selling to be had within Bitcoin. Um, Again, the major buying ranges that I've been focusing on is basically right at that 90,000 and this 74.4. Okay. Um, yes, you could buy in between that, but I kind of explained in yesterday's video why I'm really looking for those two specific points to buy at. Um, if we start seeing some major bullish structure and narrative change that's going to push Bitcoin upward, then obviously I will start buying in that range prior to it. But so far, it does look like there's still roughly a whole $12,000 downside. And that's going to be a very big leg down. So if we're going to get that downside, I want to buy it. So, all right, let's get into treasuries and getting into TLT. Now, I do want to preface this, okay? We did our drawings last night, or, we've actually had these drawings highlighted for a while. It does look like so far we are seeing some of this head and shoulders playing out. Okay. However, this previous bullish cup has not been invalidated yet. We actually need to break below the prior consolidation channel line to really solidify that we are going to be heading downward. Now, with that said, this December timeframe for the majority of the bullish contracts is starting to look pretty grim. Okay. Um, I did not get to make a post on Weeble, but I did make a post in the group chat that we should definitely start trimming some of the December positions and positioning into a lower strike for December, but still focusing on the March 96 calls. So basically, what I did was I purchased some of the 90 call strikes for December 31st. That's going to pick up some of the lost weight on the prior December contracts and allow us to still catch the move, as I'm still very bullish on TLT. It's just moving very slowly, and with just all the different market conditions that have happened with the government shutdown, not giving us data for almost a month and a half, with this collateral crisis going on right now, and even though I do think it's going to be bullish in the end, it is still forcing some countries to have to sell their 10-year bonds, which will be pushing the yields upwards slightly. Now, this is really the whole grand scheme right now of the technical analysis, and we haven't broken out of the structure yet, even with today's selling. Remember, we did have the X dividend today, and it wasn't a very large dividend. But dividend days are generally the days that you do see the selling on. So it makes sense that we did see selling today from, just that aspect. And with the collateral crisis going on, and we do know for a fact that that is still ongoing with Bitcoin being liquidated, with a lot of equities being liquidated, with treasuries being liquidated. Somebody needs a lot of dollar collateral, okay? And that's exactly what all of the selling in the market is currently telling us. However, what the 10-year yield is telling us is even though we're seeing a little bit of upside, it's still on this massive downside or within this massive downtrend. And I have a picture on my phone, which I'll show in tomorrow's video, uh, showing the actual channel on this because I can't draw it on Webull for some reason on the computer. But we're still within a major selling channel on the 10-year yield, which means that the expectation should heavily be expecting the downside. We also have a Trump presidency, and let's just go back to the last Trump presidency, okay? Um, that was from 2017 to 2020. Okay, basically, 2021. Now, what happened? You had the yields slightly pull up during the, you know, very first half of his term, very beginning of his term, first half, whatever you want to call it. And then during the second half, they started to plummet downward. Okay. Um, we all know that Trump keeps saying, cut the rates, cut the rates, cut the rates. He's wanting to fire Powell, he's wanting to fire Besant, he's wanting to fire everybody. Cut the rates. Yes, I know the Fed does not control the rates. They definitely play a key role in helping, place a weight on which way the scale ends up. Okay. But they don't fully control it, obviously. Now, with that said, going over the whole Trump presidency, we see the upward, that uptick when he first became president. And even with all the extremely, extremely hawkish tariff news, pure downtrend. Okay. Um, it's extremely likely that we will continue this downtrend. Um, I'd be, I'd be very, very surprised to see it pick upward at this point, especially when we're going to be seeing one of the most dovish Fed members becoming the uh, next Fed chair, whenever President Trump decides to release that. Uh, we have new Fed member Moran, who is extremely, extremely dovish. We have Besant, who, even though currently he's following a lot of Yellen's policies, Yellen's prior policies, he's still very dovish in the grand scheme. So we have a lot of powerful people in the places to really push the yields downward. If there's ever going to be a push downward, then we kind of have everything necessary to do so. We have a crumbling labor market. We have weakening consumers. We have weakening companies. We are starting to see layoffs, reduced headcounts, a ton of reasons for the yields to heavily shift to the downside. Um, I'm a big believer that we're going to be getting the zero interest rate policy era again, which is basically the ZERP. That's why I always make the ZERP memes, but uh, I'm fully expecting us to really pull down very, very aggressively very soon here. Once we start getting more data that shows that consumer weakness has been picking up, that labor market conditions have been weakening, all that stuff is really going to add to the narrative that yields need to come down. And it's not that the Fed needs to pull the yields down, because I think that is, a misconception that happens sometimes. But I'm talking about not the Fed pulling the yields down, but the treasury market as a whole pricing in the yields down, towards the downside. So that's kind of the technical analysis. Just be very cautious with the December TLT positions. However, we so far are seeing support at the bottom of this consolidation channel, which does heavily suggest that we will bounce to the upside. Okay, we are still within this prior cup, and if this is going to be bought upward, that will make a cup and a handle. This prior downside was all the way to the 88.45. We got to the 88.71. So even though it might be a few cents off, that's all you really need to validate the cup and handle towards the upside. So we will see how that plays out. Um, but I'm not bearish on treasuries just yet. I do think that we will kind of defeat this selling that's been occurring and really start to see buying towards the upside when um people really start seeing the risk within the equity market, within Bitcoin, and all these other markets. So that's tonight's technical analysis. Sorry it's not the most in-depth. I still have pneumonia. Went to the doctor today and found that out, so that's fun. But besides that, I hope everyone has a safe trading day tomorrow. Have a great day. Expect the 5 mod test to occur. Um, Other than that, thank you for watching. Thank you to those who support me. I greatly, greatly, greatly appreciate it. And other than that, I will talk to you all in tomorrow's video. Take care.